Nasdaq Composite, the great winner that it's been in this calendar 2012, 3 months at 97.1. Well, we're 97% overbought. MMTs, welcome to the apprenticeships. Here's your live updates. One of the things is that we're going to be talking about, like we have for several weeks, is we're going to go back over here into this period of time. 2001 period, all the way up to this area. And what I'm going to do is I'm simply going to take this part of the chart right here so that you can see what 2012 looks like right here on this weekly level. And where we were involved in these markets every single day of our life, just like we are today back in this. Oh man, you want to talk about a parabolic bull that was manipulated, future gaps, like, oh boy, those were the days. But look what happened when it got too overbought. Came crashing all the way down. Hello, how are you today? 9:10 a.m. Pacific Standard Time, 3/17/2012. One of the things that we're clearly going to show, as of right here, I'm going to take this piece. I'm going to let you know, MMTs, and I'm going to just draw some basic trend lines for you because I want you to know where the overbought process, and I want all MMT apprenticeships and in the trading division, you know, our trading programs, you can tell here that we are hitting some very key areas back in the 2000 period. I was there every day. I witnessed it. I was there. I'm telling you now that that frequency has brought us up here to the levels that when you see new bulls starting, I'm going to show you clearly here again. I'm going to zoom this part of this time period, and I'm going to go right in here on these weekly bars back then. That was real good volatility, by the way. However, we're right here at the lower end of these bottom wicks where we are on the Nasdaq Composite 1355.26. Well, I'm sorry, come right over here and take a look at these lows that were major supports from that 1999 into the 2000, what I shorted in March 14th of 2000, I did, on the Nasdaq Composite. And having been through it all these years, I can tell you that this is the major wall of resistances. And in our platform, the SMF platform, I'm just showing you this here with the zoom tool and all, is that you can clearly see that right here, where I'm going to go right at this tip, bingo, 3120, 3154, and this is that wall of resistance, what used to be the great support levels back over here in 99 and 2000. I know when they broke down. Look at some of these weekly wicks and that volatility. What I am going to tell people, we are at the upper end of the bull rally time cycle, bull rally range, and we're due for that pullback, and it could come sooner than not. There is a 2 to 4 week pattern. This is part 2 series, stockmarketfunding.com. That's right. And it's the analysis that you need to be aware of, that the leadership in the Nasdaq Composite, within its sector rotation of the leadership in the Nasdaq Composite, is that those stocks too have had their great bull rallies up to the highs. And yes, everything can go a little bit higher in exuberance, but every bull, whether it's a natural bull, organic bull, where that's where the public is really involved, or how much of this run has been high volume computing machines driving these price levels back up to this period of time. Yeah, the media has always got a bull case in the public venues and everything else. Look at, I'm good for their opinions on both sides. I respect both of them, always have. However, one thing I do respect more so is overbought markets. I really respect them. And I really respect the fact that the bull exhaustions, and you can always use last week's Apple trade, 600 down to 678, whatever it was. When they get overbought, you have to see that bull reversal volatility to lower support levels in the bull. Then you bounce off support levels. And we have come to the wall of resistances right back over here in this period of time, and that is going to be the major wall of resistances right through here, this whole area. I'll just draw an X, and it's going to be this part of it, right there, right here, this whole X area, these upper trend lines, okay? And we could easily, we're so overbought though, the chances of hitting 3,200 right away are smaller now, much smaller, because of the amount of overhead resistance levels that are going to have to come through here for the apprenticeships. You need to know that we are hitting a major cycle going into April and May. It would take a while. You'd pull back, you'd go up. However, the bull run's getting exhausted, and it was a great run. You let them go as far as they can. You just need to know what time period it was where, so that you understand where this wall of resistance is. And if I go back another time periods over here, you can clearly see that the 2007, I mean, here's what has happened, is that all of these areas that were right here, these were the 2007 high reversals here at 2,800. Look, we're up here at 3,055. We took it out, all-time high, and it happened in calendar 2012, election year, and everything else. More stimulus is going in this economy. You can always check under the SMF economic section. We'll be happy to update you. Join one of our live radio shows about topics. So we know what the upper end of the trend lines are. And if you can totally break through, of course, there's going to be some pit stops. We'll use our own platform to get the exact ones. But this is that time period that goes over there, MMTs. Wall of resistance, extremely overbought. Part of the overbought bull process before the key reversal comes in remains 1 to 3 weeks. Last week it was 2 to 4 weeks. We burned up the previous week. Today's date, 9:17 a.m. Pacific Standard Time. 3/17/2012, overbought Nasdaq Comp. We just let the world know that if you happen to have been involved, you got to know when to ring the cash register at some point. And this is what happens in bull rallies, is that they do get great bull breakouts and extensions, but you need to fade back and you got to work the weekly overbought process off. So 1 to 3 weeks left as we go through the time series management of bull rally trends, meaning that bull rally exhaustion. And the exhaustion price ranges is where they sell from the top down, and you get that short and they come down, then you get out at those support levels. But you have to know the trade management will still remain at exhaustion bull top areas, which is a high degree of risk for anyone, and I don't care who you are, when you're up at these high levels in these bull exhaustion traps. Beware.